Hi, happy Friday the 18th. Nick on rates with New American Funding. The market's closed today for Good Friday. Hope you have a great Easter weekend. We have had a really interesting thing going on with mortgage-backed securities. Not interesting, it was nice and normal. For quite a while, we had this nice trend up in mortgage-backed securities, prices going up. That means that interest rates are coming down. It's a nice and random walk with an upward drift, which is what we want to see, the trend line following. Just an extreme sharp up or down usually isn't sustainable, but when we get these random moves like this, that's what we like to see, kind of like a nice healthy heartbeat as rates were coming down over the last couple of months. Same thing on treasuries market. We had rates coming down nicely, over the last couple of months with the random walk and the trend line going down. And then all of a sudden, a couple weeks ago, we had hit a wall. So like Sebastian out on his excavator running across the yard, he ran into the fence and hit a wall. We kind of did the same thing with both mortgage-backed securities. I think that's his bathing suit right there. But anyway, the same thing with mortgage-backed securities and treasuries, where we had a night where Japan and China thought it would be cool to get back at the US and Trump for his talk on tariffs and just start dumping treasuries. And so that set off a tailspin on both interest rate markets. Mortgage-backed securities just tanked, partly because of the sell-off in the treasuries market from the Japanese action. But also then people started being concerned about, is this going to be inflationary? Is this going to, the tariffs, are they going to cause more trouble with inflation and other issues internationally where people are going to be pulling out treasuries, pull out of the treasuries market more? So we kind of had a sell-off, and it was a steep, sharp downturn and an extreme one, and those do not last. And we knew that it was going to come back and start back with a normal trend because we never broke through the base of this upward trend line. The idea is we want to, not go higher than the high. We want to go higher than the high a little, but not lower than the previous low to continue the upward trend line. And so we come back and we gave about 50% of what we'd seen over the last couple months as far as gains. Had a big heavy drop down one day, and that's usually dead cat bounce. You get a turn and start back up. And so we had a nice dead cat bounce, and that's actually a financial term. If you drop a dead cat from high enough, it's going to bounce. And we had an upturn, and so we got the upturn going again. Things are looking good now. We're still having inflation in the -3 numbers, between 2 and 3, where we want it to be closer to 2. And treasuries and mortgage-backed securities are both looking good. So everything's going good again. Hopefully this trend line will continue. Dog's over there barking. And we'll continue to see interest rates going down in the future. And again, treasuries, I don't think they're going to continue to be an extreme cause of with interest rates. Something's going to happen. Most people say this, and I kind of feel too. Maybe Powell will get fired. I can't believe Trump said the other day the guy needs to go, head of the Federal Reserve. But something could happen to quiet all of the concern about tariffs or other things, and just, again, with inflation numbers the way that they are, we're still expecting to see a pretty quick reduction in rate at some point, or thinking that could happen. But if things just continue as they should, we're going to continue to see a nice downturn. That's it for now. Again, have a great Easter weekend, and we'll talk to you next week.